Hi, everyone. Welcome to today's webinar. We are very excited to have everyone on today. We're having a record turnout today, and everybody needs to know about their insurance. So get ready to hear what Erin has to say. And our moderator today is Daniel Baum. He is an insurance broker, so he's going to chime in here and there. And let's get to it because I know y'all are anxious. So I wanted to mention some housekeeping things. First of all, please put your questions into the chat. I'm sorry, I messed it up. Into the Q&A, not the chat. Okay, not the chat. We record the Q&A. And afterward, if we can't get to all the questions, and we have a lot of people coming on today, we may not be able to get to every question. Erin and or Daniel will answer these questions for you. This is a CEU course for all of our CAMs out there who are getting ready to renew your license. So please allow Erin some time to post these credits and the DBPR as well. You're looking at 2 to 4 weeks to get these things credited. So in about 2 or 3 weeks, start checking. And then if they're not posted, feel free to get back to Erin directly, actually, because we're getting down to the wire on license renewal. But as soon as she has them posted, DBPR takes about a day or so, and then you'll have them on your record. Okay, with that, I want to say we have some exciting sponsors today, bringing to you the opportunity to take some bids from them. You know, right now with the law change, you might have to take 3 bids. I'm going to start out first with an attorney. We have Dahlia Anise on from Legacy Life Plan. Dahlia, good morning again, and please tell us about yourself and what you're doing for the industry.
Sure. Good morning, Peggy. Hello, everyone. My name is Dahlia Anise. I'm an estate planning attorney. So I do wills, trusts, and capacity planning, children protection planning, and so forth. Estate planning can be overwhelming, and that's why I do host webinars every so often, and I am hosting one tomorrow at 11 o'clock. I will be putting the link in the chat. It's Estate Planning 101, and we're going to be talking about so many important things, like what happens if if a spouse passes and they remarry? Could they completely disinherit your children? Yes, they can. We're going to talk about what is a will, what can a will do, what's a function of a trust, what happens in blended families, can children get disinherited in that situation? So we're going to be talking about really a lot of important things, and I would love for you to participate. I will put the link to register in the chat. And again, thank you, Peggy, so much. You do wonderful things for all of us. Peggy, you're muted, I think. Yeah.
I had a nice little saying there. I said, thank you so much. Okay, now let's move on to Shawnee Haas is on today from Munyon. Shawnee, tell us what's going on there and around the state.
Hi, I'm Shawnee with Munyon Painting. We are a third generation owned and operated painting company, painting contractor that operates mainly in the Tampa Bay area, but we have offices all over the state, including Orlando, West Palm Beach, Fort Myers. Yeah, I think that's actually most of our or most of our offices. We've been working with the community with condos and HOA communities for over 75 years, delivering high quality work that protects and refreshes your property. Some of the painting services we offer include exterior painting, interior painting, deck and fence painting, electrostatic painting for railings and metal surfaces, as well as surface preparation and priming. If you manage communities in any of the regions in Florida, we'd love to be a resource for you. And thank you, Peggy, for having us on.
You're welcome. That was speed advertising at its best. Very good. Next, I just want to mention we have another sponsor who can't be on today. She's working very diligently on her audits, etc. Is Hafer Company. They're a full service CPA firm, and they are located at 4 offices around the state. So if you need an audit or you need a full service look at your properties, books, and so on, please call Nicole Johnson, and she will be on the sponsor sheet as well as all of the sponsors for today. Next, I want to introduce Siobhan Gonzalez. Siobhan's on from United Professional Engineering. Tell us about yourself and what's going on over there at UPE.
Good afternoon, everyone. Thank you for being a part of our webinar community. We're so glad you're here. I am the Business Development Manager at United Professional Engineering. We are a full service structural trained and experienced specifically for condominium associations. So we support our boards and our managers and our associations with, effective, efficient, those building recertifications that are coming up that I know some of you might be past due on. I've been getting a lot of calls of those late about that certification, whether it's a phase 1 or phase 2. We certainly can help you with that. And sometimes corresponding to those inspections, there are projects that come about. So we oversee all of our concrete restoration projects start to finish. This is very valuable for our boards and our associations because it creates peace of mind when you know where you're going and the end result. We maintain clear communication, and right now we're doing complimentary proposal consultations. So love to connect with you, hear what you have going on, and how we can help. Connecting with you soon.
Awesome. All right. Well, I just heard a scary number that 52% of the condos have not done their milestones. So pretty interesting. It's been a couple of years now. Okay, thank you for that. And now I want to introduce Jamie Gelfand. She is with First Citizens Bank. Jamie, tell us what you're doing for the industry.
Hi, good afternoon, everybody. I'm Jamie Gelfand. I'm the Regional Sales Officer for First Citizens Bank. First Citizens is a 125-year-old top 20 bank. I work in the CAB, Community Association Bank Division, where we provide lockbox, FDIC protection, and loans to association. If you're needing funding for any of those milestone reports, we don't require you to move your operating account. We will just be able to auto debit from any financial institution. I'll put my information in the chat. I hope you enjoyed today's class. Thanks, Peggy.
You're welcome. Awesome. I see a lot of you putting your CAM numbers into the chat. We don't record it. I'm not writing them down. When you registered, you did have to enter a number. It would either been a 0 or it would have been your CAM number. So we do have all of your numbers. Don't worry about that. We will get those to Erin. Next, I want to mention PD Concrete. They are not on today. They normally are, but they are based out of West Palm Beach and have 2 offices now, one down in Aventura. They are concrete specialists. So if you need anything to do with concrete restoration, please reach out over there to their owner, Daniel Pena. I have right now today, I'm happy to introduce Ben Friedman, the president of City Quiet Windows and Doors. Hey, Ben, tell us about yourself. Where you been? What's been going on? I haven't seen you in about a month.
Well, that's not true because I saw you last week in Fort Lauderdale.
I mean on a webinar. What?
I know. It's chaotic, but all good things. Thanks for having me back. Wanted to pop on. Insurance savings, cutting costs, impact windows and doors, huge factor in that, amongst other things. Ben Friedman, I'm the owner of City Quiet Windows and Doors. We are headquartered in Boca Raton, office in North Miami, Fort Myers, and Naples. Happy to be a resource with and for you when it comes to insurance savings. Again, huge line item if you're building, it's a Class A rated building, which would mean impact resistant windows, doors, utility room doors. I'd be happy to give you an idea of what a budget would cost to bring your building up to a Class A rating. And therefore, you could then speak with someone like Daniel about what kind of savings your insurance will be able to get you, and see what kind of investment it's going to take for that investment to pay itself for a period of time. So I'll put my info in the chat. Hope everybody has a good day. Thanks for having me.
You're welcome. Thank you, and drive safe. Next, I want to mention Southwest Elevators. They're not on today, but they are elevator installers. You can reach Brooke Cavender on there or Brandy Cavender on the sponsor sheet. So if you have anything to do, I know this is a good time for budget season. So take a look at your elevator costs and reach out to them if you need something in elevator area. Next, I see we have Diana on, the new vice president for Best Roofing. Diana, tell us about what's going on at Best and how are you doing?
Good, Peggy. Thank you so much, and thank you for having me today. Very excited to be back to the virtuals because I haven't been in one in a while. But as Peggy said, I'm the Vice President of Business Development at Best Roofing. Best Roofing has been in business for 48 years now. Now we are covering the whole state of Florida. So if you need anything in roofing, a simple question, an inspection, a maintenance program, a re-roof recovery, absolutely everything. We do it. We do it from little to big. We do single family homes now. So if you have questions about those too, we do high rises, shopping plazas, warehouses, HOAs, condos, absolutely everything, you name it. And as I said, we're covering the whole state. So if you have any question or need a free roof inspection, please contact me. I put the information in the chat box, and I'm more than happy to be back here. Thank you so much for having me. Have a great class.
Thank you so much. All right. Next, I want to introduce the Vice President for Faster IO, Bob Aleka. Bob, please tell us about what's going on at Faster IO. I heard you've been busy.
Yeah, we have. Thanks, Peggy. Good afternoon, all. Bob Aleka here with Faster IO. We've been managing, maintaining, and designing fiber optic infrastructures for condos, HOAs, buildings, you name it, for over 25 years. What makes us different is that our fiber optic infrastructure is not a shared infrastructure. Most of the providers do a shared infrastructure where it's like Comcast, it's being shared. We get a dedicated circuit for each individual unit. It's very important for that today because artificial intelligence takes so much of personal information that security would be more than just another thing. So we also do streaming TV, which allows you to take it wherever you go, change your zip code, get your locals of that zip code, and change it back when you come back. You can take it with you wherever you go, so it's not locked in. You don't lose it if you're a snowbird. We do any kind of size condominium or HOA. It doesn't matter to us. So if you're looking for something to get a little bit more information, try to get a proposal, just learn a little bit more about our company and how we do things differently, please give me a call. I'll put my information in the chat, and enjoy the class. Thanks, Peg.
You're welcome, Bob. That's what I love about your service. You can take it anywhere. That's just awesome. So, all right. Next, I want to move on to introducing Damaris Cabrera. She is with Clarkson and Varick. They are elevator consultants. So, how are you? What's going on with Clarkson over there?
Good morning, Peggy. Thank you. Thank you, everyone. And very happy to be part of this community. And I do think that there is a lot of value in the consistency of all the education that you bring to the state of Florida. Well, like Peggy said, we are elevator consultants. Clarkson and Varick is a nationwide independent elevator consultant. So what we do is we help with all elevator matters. So we know it's customary that the condos enter into a contract. For the longest time, all the condos were negotiating directly with the contractors, but somehow everybody seems to have issues with the elevators that they don't understand. The expectations are somewhere and the expectations are not met. So this is where we come. We come on the side of the owner as the advocate of the owner. We help to look into what the issue is. Many times, and just to give an example today, we found an association that has had this contract in auto renew, and I think this is a very familiar term for everybody, for 20 years. And we look at the contract doesn't even cover the bare minimum preventative maintenance. And everything is intended to be billed. So the bills are extremely expensive because this particular association is already married in this contract and cannot go somewhere else. So this is where we come, we help, we identify the issue in the contract. Now we can help you to get a contract that really is fitted for the needs, the age of the equipment, and the type of property. and also with the best. There are so many companies. There's no need to be married to the big ones. There are a lot of new companies, independent companies that can provide a good service. So there are alternatives. And this is what we do. We know the market, so we want to go and help. We can assist with the maintenance evaluation of the equipment, with the maintenance RFP if you need a new contract, modernization projects, and developing a long-term capital planning. So when everybody sees the elevator as a whole, the truth is that their parts and pieces age different. So not necessarily is everything is going to last 25 years, but not everything should be breaking every 10. So this is something that we are happy to help. So please call us. And there is something that I wanna mention related to insurance. If you're doing and you have your records clean and your company is obligated to do a good record, if anything happens, water damage or anything to your elevator, this is gonna go and work in your favor if you have to go to a claim. So thank you, Peggy. Thank you, everybody. Have a good class.
You're welcome. So much to know there. Absolutely. All right. I want to also, last but not least, introduce Vinteum software. Certainly the wind beneath my wings. Today we have one of the newest team members on, Paula. She's calling or in from Brazil today, remote, and she's doing this on her own today. So welcome, Paula. Tell us about what you're doing for the industry in Florida.
Thank you, Peggy. Hi, everyone. I'm Paola, marketing analyst at Vinteum. Thanks for being here. Let me tell what to do here and why it matters to you. If you run an HOA or a condo, you know the hard part is in the paperwork, is the people. As a software, we give your community two things. The first one is a specialized website built to meet the requirements here in Florida, so you're not guessing about the law. And second, a resident portal, one place to send notice, hold your meeting, take service requests, and actually reach your residents without chasing them down. And here's the part I care about most. We build this for real communities, not for tech people. So if your residents don't love email or only show up for the winter, we talk about them first. That's why you have smart calling and text blasts. And when hurricane season hits, you can reach every resident in minutes. Snowbirds are included. That's not a nice to have, is how you keep people safe as well. And you're never doing this alone. We train and support you, your board, and your residents as well. You don't have to become the IT department for your community. You don't have. And if you need a new website or resident local, let's talk. I will drop our info in the chat. We've also launched a free light version, so you can try the whole thing yourself before committing to anything. And that's it. That's Vinteum, everyone. Let's get into a demo. If you have any question, just let us know.
Absolutely.
Thank you,
Yeah.
Peggy.
You're certainly welcome, and great job on the intro. Free demos, you guys, free websites. You can't beat it. Give it a try if you haven't gotten your own website. Try to be autonomous if you can. I'm a big proponent of that. I know the management companies offer websites, but if you make a change, board members, you got to get all your information switched over, and sometimes it's not a easy situation to do. Now, with that, I want to turn this over to our moderator for today, Daniel Baum. He is the founder and CEO of COA Solutions, a very committed insurance brokerage in the state of Florida. Daniel, I'll let you take it here and go on into introducing our guest speaker.
Thanks, Peggy. Hi, everyone. Good afternoon. As Peggy said, my name is Daniel Baum. I am the founder of COA Solutions of Florida, an insurance brokerage specializing in condominiums and HOAs. And it is my distinct privilege to introduce our presenter today, Erin Nickerson. Erin is a highly respected leader in the property restoration and community association industries. Her career has been built at the intersection of property damage, disaster recovery, insurance claims, client education, and association leadership. Over the years, Erin has worked closely with commercial property owners, community association managers, board members, insurance carriers, adjusters, and many other professionals following any water, fire, storm, mold, or other major property losses. She understands not only the restoration process itself, but also how a loss is evaluated, documented, communicated, and ultimately resolved. Just as importantly, she has seen firsthand how decisions are made before and immediately after a loss and how that affects the claim, the extent of the damage, the speed of recovery, and an association's future insurance costs. Erin currently serves as a senior account executive with the Water Restoration Group, but her commitment to the community association industry extends far beyond her professional work. She has served for more than 6 years on the executive board of the CAI Gold Coast chapter, including a term as board president. She has also been actively involved with Baum Fort Lauderdale and the Palm Beaches, True Fort Lauderdale and Boca Raton, and multiple CAI chapters throughout South Florida. Through those roles, she has built a reputation not only as an industry expert, but also as an educator, leader, and trusted resource to managers and board members. That combination of restoration expertise, insurance claims experience, education, sales leadership, and association services give Erin a perspective that very few people have. She has seen what works, what creates problems, what associations can do differently to better protect their properties, strengthen their loss response, and manage the long-term cost of insurance. It is my pleasure, and please join in welcoming, with a warm welcome, Erin Nickerson.
Well, those are a lot of very, very nice words, Daniel. Thank you so much.
My pleasure.
Again,
Erin, before you get started, I just want to remind our audience, ladies and gentlemen, Erin's going to take questions throughout her presentation. In order for us to keep an eye on that, please do not put them in the chat, but put them in the Q&A, which I will be monitoring throughout, and I'll be able to ask Erin all of your questions as we go along. So I'm sorry to interrupt you, Erin, but once again, your floor.
Thank you. Again, my name is Erin. Those were a lot of very nice words to say that I've been in the water restoration space for the last 10 years. And the marketplace has vastly changed from where I started to the state of the union now. And I think this was a timely presentation for us. And Daniel, I'm going to lean on you because, you know, I nerd out when it comes to insurance, but you're the license that says that I'm correct. So we're going to have a nice little conversation today on what your association can really do to understand how to make your insurance premiums come down within a soft market. We spent the last 5 years in a hardened market where premiums were just rising and increasing. And now that's changed. So what can you do at the association level to really get your premium down and save the association some money? I'm going to go ahead and share my screen for this presentation. Again, like Peggy said, this is a CEU course. Give me a couple days. I'm pretty quick with it in getting your course credits filed. If you're a board member and you don't hear back from me in the next few days with a certificate, please feel free to reach out to me directly. My information is already in your group chat. Daniel, can you see my presentation on your screen?
Yep, everything looks great.
Awesome. Let's get started. So this is a 1-hour CEU class. Get through the boring stuff first. What we're going to talk about today is the rising cost of insurance premiums in Florida and how that's changed in the soft market, preventative maintenance being your first line of defense, what is hardening your building and how that affects your property damage or lack thereof, and then really understanding what your loss runs are and how the insurance carriers evaluate that, how we can prevent a loss from happening and reducing that premium. Start with section 1. So the factors that drive up premium increases are 3 major things. First is an increase in natural disasters. So if we stay stagnant, like they're predicting this year, and we don't have any hurricanes, that will help reduce the cost of our insurance premiums. If we do have a lot of natural disasters, and it's not just here in Florida, this is a worldwide natural disaster, and specifically in the United States, right? That also can affect our premiums here in South Florida. Your aging infrastructures is one of the biggest factors that is going to increase your premiums. So making sure you stay on top of your building envelope and the maintenance program in your SERS studies, if you're in condo or co-op. If you're in HOA, it is a recommendation that you also have a study for your roadways, your clubhouse, and staying on top of that maintenance schedule as well. Your rising costs of repairs and lawsuits can also drive your premium increases. So if you have an association, whether you're condo, co-op, or HOA, and you have an increasing amount of people suing the association, suing each other back and forth, and driving those claims up, that can also directly affect your premium. So what is this soft market that I'm talking about? And Daniel, I'm going to lean on you here. So the soft market we also call a buyer's market. And this is when we have an increased number of carriers that are coming back into the state of Florida like we have right now. It creates a competition at the carrier level. And that's really where we want to focus the competition, not at the broker level between Daniel and Brown & Brown or IOA or Plasters Insurance, whoever your policies are with. We want to make your association become more desirable to the carrier, so that way whoever your trusted broker is going to go be your advocate at the carrier level and say, this is my client, here's all the factors and why you want them to be a part of your premium and your pool, and that's where your agent comes in. So the characteristics of a soft market: lower premiums, rates have become more stable and decrease as carriers compete for the market share, we just talked about. Broader coverage is another characteristic of the soft market. And this is where I'm giving, and Daniel and I are going to have a little conversation about this one. There are a couple things that we're seeing right now that your brokers should be talking about with you and asking you about. One is preventative maintenance. What have you done this year? What is your CapEx projects looking like for 2025, 2026, and 2027? Because if you're re-roofing, that makes you more desirable. If you have a contract signed for a roof for 27, that's something we want to share with a broker. One other thing that I'm seeing that I'm going to ask you, Daniel, what you're seeing is in the policy language for hurricane deductible, we're seeing it go from a per loss occurrence to a calendar year. And that's the competition at the carrier level. So if you don't have a calendar year deductible for hurricane season, that's something that you're going to want to ask Daniel or your current broker and say, is that an option? Is that available? Daniel, are there any other coverages you're seeing that are great for associations to be asking about?
Well, in the soft market that we're in, everything you've said so far is 100% accurate. The key is really, and I'm seeing a bunch of questions pop up about, will this lower my insurance premium or that? I think the most important takeaway for everyone here is to understand that a soft market exists when the carriers are competing with each other to place risk, or essentially to write your policy. And that literally has nothing to do with us, with the community. That's simply a factor of competition amongst carriers who want your premiums because, let's face it, and I say this a lot and people don't, they'll laugh, but it's the truth. I have insurance on my home just like you guys do. Insurance carriers are typically in the business of selling us insurance, and then they don't really want to give that money back. So if they're competing to write our premium right now, it's because they feel like we're in a market that is competitive, that they don't have as much risk in, and that they feel the factors are strong. In terms of what you should be looking for, it really comes down to what coverage you have now and how can that coverage be improved or the premium be reduced. So for example, you just mentioned a per occurrence premium, a per occurrence deductible, versus a calendar year deductible. So a calendar year deductible is the one you want. Why? Because it means that if you have multiple storms or multiple losses over the course of the year, you only pay one deductible for the entire calendar year versus a per occurrence deductible, which, as it sounds, means each time you have a loss, you have to pay that deductible again. Now, you're going to pay typically a higher premium for a calendar year deductible than for a per occurrence deductible because there's more risk to the carrier. So per Erin's, what she was saying earlier, one of the things you see in a softer market is sometimes the carrier may not reduce your premium as much year over year, but they might offer you better terms. In this case, a calendar year deductible versus a per occurrence deductible. Or many of you may remember that for many years, your deductibles were 1% or 3%. And now most of you are seeing deductibles on your policies of 5%. And so why is that? Why are you paying more out of pocket on a loss than before? Well, the answer is in a hard market where we were paying much greater premiums, the way to reduce our out of pocket premium expense was by increasing our deductible amount. So again, one of the things you should be looking for in a soft market is if you're not as sensitive to the premium itself, meaning you can afford the premium you had last year and don't necessarily need to bring it down this year, then you want better terms this year than you had last year. For example, bringing down that deductible from 5% to 3% or 2%, or having a calendar year deductible versus a per occurrence deductible. These are many of the different facets that you find in a soft market that you should be paying attention to or understanding when you make a decision for your policy renewals. I don't know if I answered your question entirely.
You answered it perfectly.
Okay.
And it made me think one other thing too that I'm seeing. If your association was with Citizens and now you're back into the general market, there is a coverage called Ordinance and Law. And
Yes.
Ordinance and Law has 3 different purposes. My favorite purpose is when we do have these large claims, and your building needs to come up to the new building code. It's almost like gap insurance, and you can tap into that side of the policy for additional funds. Super important. And people always ask me, Daniel, how much Ordinance and Law coverage should I have? How much can you afford is the real question.
Yeah, we could have a conversation on insurance, Erin, for hours and hours and hours. There is so much information that we can share with everyone. We all here want to educate you guys. We want you to feel empowered that you understand what it is you're signing for, not just blindly accepting what you're being told. And so per Erin's point, there's a lot of changes that take place when you come out of the Citizens market. Honestly, Citizens, God bless them, they serve a purpose. We're lucky to have them in many ways, but they don't give you the best coverage. They're not giving you the best possible coverage. They are going to limit dramatically what exposure they have, what they will cover and what they won't. If your community is still with Citizens, you definitely will want an insurance professional looking at that, because I don't have any clients with Citizens, and I had almost, I would say 90% of my clients were with Citizens 2 years ago. So that's something that you should seriously be looking to extricate from and find better coverage going forward, if that's an option for you.
I'm in agreement with you on that one. The only caveat to the Citizens world is if your building has EIFs, and you'll know if your building is EIFs. Sidebar conversation. If anybody wants more information on that, Daniel and I are available. We love to talk about this subject. So jumping back to the presentation on what the role of proactive management is in cost control of your policy. Proactive property management and proactive maintenance is how you can, as a community, save yourself money on your insurance policy. It's your first line of defense. So what does that mean? Proactive preventative maintenance. It's making sure that your key systems of your associations are being updated and are reaching their lifespan, or you're taking care of them before they reach the end of their lifespan. So when I think of HOA world, I think about your roadways, I think about your clubhouse, your gate systems, your guard gates, if you have those, any amenity that you may have, making sure sidewalks, that's one we don't talk about enough. Making sure you're taking care of all of these items and avoiding trip hazards, making sure your sprinkler heads are functioning properly. All of the systems that you pay for, we need to make sure that they're maintained and replaced when the lifespan is up. And every system And I even think like condo co-ops, your vertical building, making sure that your roof is in the right condition, all the systems on your roof, even if you are an HVAC community and the individual unit owners are responsible for maintaining them, all of those systems have a lifespan. When you purchase them, we need to make sure that they're being replaced during that lifespan. For example, hot water heaters. The average hot water heater fails before year 12 now. That's a huge number. And we're going to talk more about what we can do preventative wise in a few more slides. And then risk reduction programs. There are a lot of contractors out there that offer risk reduction programs free of charge. Myself, we have a financial risk and exposure program that we can help explore with you. There's other contractors out there and other insurance brokerages that also have these programs for you. I work with one carrier that even provides them to their client directly at no cost to the client. And more information, you can email me on that one. So going down the rabbit hole of preventative maintenance as your first line of defense, we talked about how it reduces your unexpected claim, extends the lifespan of the property's assets, and builds trust with your insurance professionals. Having this program documented is the number one key. I call it an asset management binder. If you're with a management company, they have this for you available already. If not, please email me and I'll help my self-managed properties get this program going. It's basically everything you own as an association. How many HVAC units do you have? How many parking structures do you have? And what is the year and when is it being replaced? Almost like your SIRS report, but you're keeping that documented in one place. So your key maintenance areas for condos and HOAs, I want to see whether you're a condo or HOA, an annual roof inspection. And Best Roofing on this call does them for free. That's right. It is a free service that gives you a condition report of your roof. I don't care what type of community you are. And I think Daniel will agree with me. When you go and you have to file a claim for your roof, you give them your condition roof report. And if you haven't done it this year yet, do it now. I always want it done prior to hurricane season. So like your June 1 annual inspection list, roof inspections. I don't care, again, what property you are. If you take nothing away from this, please get a roof inspection. Also, your plumbing system checks. You're going to say, Erin, my plumbing systems are behind the walls. A lot of my associations have put into their architectural modification packages that people submit in condo and co-op. They put the management team or our plumber must inspect all plumbing lines within the interior of the unit before you can put up the drywall. Such a great preventative maintenance program, and that documented will help Daniel if a claim does happen. Super important. HVAC maintenance, it's so, so important. The HVAC is the lungs of your building. It's constantly breathing in and out. And from a building perspective, from an association standpoint, I like quarterly inspections from a licensed HVAC contractor. From an individual unit owner perspective, for their system itself, I like a twice annual service and a monthly filter change. If we are not a full-time resident in condo and co-op, we could go bi-monthly, but it's checking the systems, make sure that they're working correctly. I have a couple associations that even have put positive policies into place for their association. So what does that mean? It is a rule that the board can put into place anytime that says we require everybody in this building to do 2 inspections by a licensed HVAC contractor per year. And if you don't do that, we're not going to police you, but when you cause damage to our property and you can't provide us with those inspection reports, those service reports, it now makes you negligent. So having those positive policies will reduce the actual times that those systems can leak into a unit. And those documented systems, those documented rules in your meeting minutes are what Daniel's going to need to provide to the insurance company when one of your homeowners destroys the property. Because as an association, when it comes to condo and co-op, once we know that there's a water damage situation affecting our common element, our drywall, right? Because we own the drywall. Statute 718.111 subsection 10 says that we own the unfinished drywall in the units. It's important that you have documentation the entire way out to hold the people that are destroying your property accountable for their negligence. Another really good one for positive policies. A lot of my associations are mandating a hot water heater be swapped out every 10 years because we just don't build like we used to anymore. And then I even have some associations that are amending their original association documents. If your building was built in 1974 and you have original documents, our statute has changed since 1974. And how it works is that we follow Florida state statute first, and then your documents and your rules and your regulations may give you more responsibility, but statute comes number one. So it's important that we understand that things have changed since 1974, and it may not be the same rules that we're playing by when it comes to filing claims. So if your documents are old, I highly suggest you consult with your attorney because you need your attorney to amend your documents with you. You can't just go do that. There's a process and a procedure to follow, but it's so important that you are putting these at minimum positive policies into place and making sure that your maintenance obligations, not only for the association, but for the individual homeowners, are understood. Moving forward on this one, establishing your maintenance schedules. How I think about maintenance schedules is in from 50,000 feet down to the daily. So first and foremost, what does my staff need to do every single day maintenance-wise? Put it on a checklist so you can hold them accountable. What are they doing weekly? What are they doing monthly? Followed by quarterly, biannual inspections, and then yearly maintenance. So all of those different facets, if you have them on a checklist, and I'm a big proponent of a checklist to hold people accountable, you're going to have everything documented in case something happens. And that's your preventative maintenance program that you're then going to go give to your broker. You're going to give it to Daniel, and he's going to say, hey, carriers, I have this awesome client in Boca Raton, high-rise building on the beach, and they've got all of this stuff together to make sure that they don't have to file claims. Equally important is having a hurricane plan. That also needs to go to your broker and say, my client's got a hurricane program. We've got this nifty little app that Erin set up for us, and we are super prepared. This is our disaster preparedness plan. Making sure, and one of the most important things is using tools and templates for those routine checks. A lot of our properties are now using Building Link. Maybe you're with First Service and you have proprietary information, but we need to make sure we have a work order system that isn't me writing down unit 106 had water damage. It was a plumbing leak. Oh, I saw mold while I was in there. We need to make sure everything is documented accordingly. And there's a lot of great tools out there for that. Building Link, I see it everywhere now. I'm sure Vinteum has something as well. When something does happen, documentation is paramount. There is nothing like a video of your maintenance guy, your property manager, videoing the sprinkler head that's going off on the 7th floor of the building, going all the way down to the 1st floor, water coming through the ceiling. Documentation, documentation. Photos are worth 1,000 words. Videos are priceless when it comes to the claims process. Engaging in reliable vendors. This is a soapbox that I stand on. Super, super hard. Any vendor or business partner that's walking onto your property needs to provide the association with a COI naming the association as an additional insured. The other thing that you need to look out for is in the vendor contracts, you need to make sure that there is a waiver of subrogation if your vendor slips and falls, causes damage to the property while they're on site doing some work, that they can be held not liable. That is not good language for any association. In fact, I have one association in Jupiter that twice now they've had a contractor on the property. They've hit a sprinkler head and flooded out 3 floors of a building. And that contractor just pulled up their contract and said, we have this in the language, if we cause damage, we're not liable. And their contractor's insurance company denied the claim, so the association had to pay out of pocket. Reliable vendors are so, so important. Get references. Ask, who are you working with in the area? Is this your first job in a high-rise building? Because how I work in a single-family home is very, very different than how I work in a high-rise building. It is also different than how I work in a commercial Class A office building, which is different than me working in a hospital. All of your vendors need to be vetted so critically. It's really, really important because it will save the association so much money in the long run. So building hardening. One of the most important concepts to understand. So this is measures to protect against hurricanes, flooding, and other natural disasters. Benefit is it reduces your repair costs and your insurance premium. So I don't know if you guys heard earlier, Ben, the owner of City Quiet Windows and Doors. I'm going to let Daniel answer my question because it's loaded. But Daniel, going complete impact on your building. How do you get credits? Do you get money off your insurance policy? How does that work?
Yeah, so what I can tell you is the two most impactful ways to reduce insurance premiums have to do with your wind mitigation report. The first one is exactly what you're saying now, what we call opening protection. And opening protection can be in the form of hurricane windows and doors, or it can also be in the form, if you're not in a position financially to change what you have, in fixed accordion shutters, not the ones you take up and put down, in between storms. They have to be fixed in place. Now, I can't tell you today, but I did well, before I say that, the other side is what's called your roof to wall connection. Those are the two components of the wind mitigation report that make the biggest difference in the premium you pay for your windstorm coverage on your property policy. I did an evaluation 2 years ago at the time of how much money would it save my communities if they were to put hurricane windows and doors in place. And one thing to note, and this is very important, you cannot just change a few windows or a few doors. It has to be every single opening, or the insurance company will not give you the credit for having it. Because the way, and I'll let, if I don't know if Ben's on the line or not, but he would be the best one to explain this. But essentially what you're creating is a building envelope. And the way hurricane windows and doors works is it's not just protecting you from the projectile that gets shot at your window. It creates negative and positive pressures that allow for protection of the entire building envelope. So that's why all of them have to be replaced. Back to what your question was, the answer was, at the time that I did the evaluation, adding hurricane windows or doors or full opening protection saved communities as much as 40% of their insurance premium. And that's an enormous number. The only thing that will help you further is, as I said, the roof to wall connection, which that's a different conversation because you would evaluate that at the time that you might be replacing a roof. But the opening protection is pretty much the no-brainer today, and the easiest thing for a community to do if they're in a position to do it to reduce the cost of their windstorm coverage.
I want to talk about roofs for a minute because I see some pretty horrific things when choosing roofing contractors. Please, if you have a flat roof, do not hire two different roofers, one to do your mansards and one to do your actual flat roof. It is so important that you use one contractor to handle the entire roofing system. I've seen it where the failure at the roof is between the two pieces, and each contractor is like, it's his fault, it's your fault. So it's really important that you make smart choices when dealing with a roof. It's also important that, go ahead.
No, please.
So it's also important when you're dealing with your roofing project to make sure that your roofer is a licensed and insured commercial roofer and provides you references. I see a lot of times, especially with my smaller associations, they're going to go with the cheapest bid and the contractor who it's their first commercial flat roof they've ever done, and they're normally working in single family homes. Please don't choose that person. You do not want to be the guinea pig and then have to call me because they don't dry in your roof in the afternoon. I've had some of the largest losses of my entire career from roofing contractors that have not dried in roofs, where it just happens to be a rainy weekend and it's raining inside everybody's units for 3 days. Really important that you make smart choices when dealing with that. Also, address your concrete deficiencies on your roof, if you do have a flat roof, at the time of your roofing project. It will save you more money long term and prolong the lifespan of your roof. Daniel, I interrupted you.
No, not at all. I was interrupting you, but you said something that just popped into my mind that has to do with the insurance at the same time. Much the same way that you don't want two different roofing contractors to work on your roof, you don't want two different insurance agents handling your policies.
Correct.
Many of your communities have different renewal schedules for the different policies you hold. And you might have an agent who you award some business to, but the next renewal isn't coming up for the future. You really don't want two separate insurance agents. Erin, I'll let you discuss this if you feel it's worth it, but I have been in situations where the loss is going to be argued many times between the different carriers. The GL carrier wants to blame the property policy or have the property policy respond or vice versa. And you have two different agents. So now who do you put in the claim with? You put in the claim with both, and then who do you go to for help? It is a nightmare. Pick one agent, regardless of what your renewals are on your policies, to represent you and let them represent you throughout, just for peace of mind. Nothing to do with the insurance and the premiums. It's just for you not to have more brain damage from having multiple people to have to work with.
So one thing is my soapbox for 2026 when it comes to property policies is the carrier has an option available to you as an association that we don't talk about enough. And it is getting an assigned adjuster. It's a third-party adjuster, not an adjuster, a public adjuster that you pay. Getting an assigned third-party adjuster to your insurance policy. And the point of that is, so you have a claims team when a claims happens. So you have me, your restoration contractor, you have Daniel, your broker. We know Engel Martin, Sedgwick, all these other different third-party adjusting firms, and we know the person that's going to be coming out to your physical property on behalf of the carrier, paid by the carrier, that we have a relationship with. If we have a relationship with this person, the claims process happens more smoothly. I can refer you guys adjusters all day long that are in the area, that are local to you across the entire state of Florida, that do great work. Like any other type of trade, any other type of business, there's good actors and bad actors out there. And we want to know who we're dealing with when we're most vulnerable at the property level. It is no cost to an association. And every other industry vertical that I work in, this is standard that you have an adjuster assigned to your policy. We don't talk about it enough in condo, HOA, association land, but we need to talk about it more because we don't want an adjuster from Pennsylvania coming down to us after a hurricane. We don't know who they are. They don't know Florida state statute. Do they care about Florida state statute? Maybe, but it's important that we know who we're dealing with. We're dealing with local people that are here all the time adjusting claims, because those are the people that are the professionals that we want to be working with. So Daniel, I'll get you more information because I've got a list of people I like and I've got a list of people I don't like.
Yeah, the question literally just popped as you're saying that. What is the process to have our own adjuster assigned or assigned adjuster? I don't know if you have time or want to talk about that now,
Absolutely.
or maybe want to answer that separately.
No, absolutely. So you'll go to your broker. So you would go to Daniel and say, hey, Daniel, I want to have an assigned adjuster. Maybe Daniel has people he likes working with. Like I said, I do play favorites. I love Engel Martin. Their team in South Florida is absolutely phenomenal. And I can give you the contact information, but your broker is the one who's going to write it into your policy. And you get one time annually during the lifespan of your policy where you can add or subtract people. If you do have an assigned adjuster that your broker has already written into your policy, all they have to do is add and or language to the policy, and they can do that at any time as well. Not every third-party adjusting firm works with every carrier, but I can give you guys, like I said, 3-4 adjusters to interview that are phenomenal, that probably work with your carriers. The big guys do most of the people. Kind of explain that one a little bit. Perfect. So jumping back to hardening strategies, we talked about strengthening our roofs and roof systems. That also involves hurricane straps to all of the mechanical items that are on your roof. Please, if you are a condo or co-op building, even though the HVACs on your roof may belong to the individual homeowners, it is so important that you inspect those units, make sure they're in proper functioning order, that all the straps are down and haven't rusted out, especially my buildings by the beach. Because although those are not ours, they cause a lot of damage to the property when a storm hits and they become projectiles. And guess who gets to deal with that? You as the association. Another thing we don't talk about enough is drainage on your property. I walk properties way too often for hurricane season and figuring out what their financial risk and exposure is. And I see drainage systems that have either collapsed, storm drains that are filled with 5 feet of sand that will not drain if we get a high tide and a king tide and a full moon. And that's the perfect storm right there. It doesn't have to be a hurricane. It could be a Tuesday afternoon and your building is in Brickell. So please pay attention to your drainage system. If you do have French drains on your property, make sure they are part of your maintenance schedule as well. There are also companies that are out there that will come and suck out all the garbage that is in your drain and take it off site and dispose of it properly. That needs to be a part of your maintenance schedule, especially if you're an HOA and you have a lot of roadways that are private. Those are your drains at some point. Important that you understand, is this my drain or is this a city drain? Keeping up with your concrete and painting projects also is one of the best ways to harden your building. And I cannot harp on this one enough. Painting your buildings no more than every 8 years, especially for my barrier island buildings, is in my humble opinion, one of the best ways that you can help your association not have water intrusion, wind-driven rain events. Also, making sure that you understand if the windows and doors are or are not your responsibility as an association. Generally, they're excluded from your maintenance, but I've seen a lot of new construction lately that my buildings that have floor to ceiling windows are association, and my sliding glass doors are going to be on individual unit owners. So read your maintenance section really, really well. And if it's not clear or defined, always get an attorney opinion. I also like, best practices wise, a financial spending policy for when emergencies do happen and putting that in place, because boards turn over. We know that we need to educate people when they get onto our board for the first time. That's why we've got all these new statutes. But having a financial spending policies, because in a water damage situation, you must mitigate secondary damages, which means you have to act immediately once you know about it. If you don't, then your claim is at risk of being denied. So super important that you understand what you can and cannot do in an emergency. And that doesn't always mean that the association at the end of the project is going to be financially responsible. We can go after responsible parties that cause damage to our property. And I know you've heard me say this. The association, especially condo and co-op, cannot bleed every time a unit owner is neglectful and a water heater bursts. We need to have positive policies in place to protect the financial side of the association.
Erin, we have time for a roof question.
Yeah, let's do it.
You mentioned not having different roofing companies. In this case, they have a roofing company that installed a hot torch system, but the board now wants to hire a different company for the maintenance.
I don't have a problem with that. I would caution only if there is a warranty involved, because sometimes it can void the language in the warranty, and maybe you have a warranty for a year, maybe you have a manufacturer's warranty for 6 years. I don't know what that contract looks like. If you want to get with me offline specifically, that's totally fine. I do believe in sometimes we don't end up liking a roofing contractor to put on our roof, and we want to have a maintenance contract with a more reputable company. I think that's perfectly fine. I was referencing more of when the roof is going on. I've seen 2 roofers work on the same roof together and a lot recently. We don't want them or one roofing company doing a flat roof and then another company doing a roof manser. That tells me that the company that's doing the flat roof may not have the capabilities to do that manser, or there's a cost associated with choosing the cheaper contractor. That's where we want to avoid using multiple contractors on the installment of it. But for maintenance, I think having a maintenance contract is one of the best things you can do for your roof. You could also, if your association, I know I saw a couple conversations happening for smaller associations. If your association can't afford a yearly roofing contract, that annual roof inspection is going to be your RFP, your request for proposal, and then you can go out and shop that bid for multiple roofing contractors for cost constraints. So it's just more about being proactive in that respect. Jumping back to incentives for hardening. Biggest one, you get insurance discounts, reduced claims from storm damage, and really it opens up marketplaces that you may have not had available for you with better coverages. You heard Daniel and I talk earlier about citizens being the last resort. We don't like their policy when you have issues. And another incentive yeah, go ahead.
No, I just want to say I can't stress this enough, because people ask me constantly about, will this reduce my premium? Will this reduce my premium? Will this reduce my premium? there is no hard and fast rules on what is going to reduce your premium for everything you might do for the building. The key, how do you get premiums reduced? The way you get premiums reduced is by having carriers compete with each other for your business. The better you can present your property, the stronger it is, the more preventative maintenance you're taking, the more improvements that you've made or preventative steps that you've made. That's going to make a carrier want to write your risk and want them to compete with others. And that's something that I really want everyone to hear. It's not necessarily that we can pinpoint, if you do this, it's going to save you this amount of money. What it is going to do is make you much more attractive, and many more markets are going to want to offer you a policy.
Agreed. One thing we didn't talk about with other incentives for hardening is meeting Florida's building code plus requirements. So depending on what county you are in Florida, you may have Miami-Dade building code, which extends from Miami-Dade to the tip of Palm Beach County. Some other counties have them, depends where you are. But you really need to pay attention to that because there's a couple building codes that have changed this year. Last year for this one actually, but you're free on type and the requirements for where your HVAC is located. If it's on the roof, it now needs to be on an 18-inch stand, and coming up to that building code may cost you more money when you're redoing your roof, but it actually hardens and strengthens your building. So there's a lot of like little tiny nuances depending where you are. If you're in the city of Boca Raton or Juno Beach, your building code requirements are exponentially higher than your surrounding neighbors. And then if you're not in the Tri-County at all, your building codes are completely different. So it really is something to pay attention to and make sure that you are meeting those and coming up to building code as you're doing these improvements. Every improvement that you do on your property, Cap XY, SERS related, anything structured, you are always going to Daniel, your broker, and you are saying, these are the things we did this year, because that's how you create that more desirable property for the carrier. Last section we have, I'll go through this one really quickly. So loss runs are your detailed claim history, and they're used by the insurance companies to assess your risk. The big takeaways here, and I know we're getting to the end of our time, is frequency versus severity. Underwriters are assessing whether the past claims are frequent or if they're a one-time issue, maybe a contractor caused damage to your property. It's okay to file claims when it's applicable. It has to make sense. But I have a lot of associations that are afraid to file claims because they're like, my insurance premium is going to go up. And that's not true in all situations. What they're looking at is if you have a frequency of loss, let's say you have 5 claims that are open because you've had slip and falls and trip hazards, that tells the carrier that you're at a higher risk because you're not maintaining that element. That's what we want to fix today. That's part of your preventative maintenance program to reduce your claim history. If we have a contractor in our building and they hit a sprinkler head on the 21st floor and it flooded all the way down to the first floor, we want, as an association, you to take financial control of that situation, dry out your common element, which is your drywall. That's your obligation. And then you are going to file your claim because your insurance carrier is going to subrogate against the responsible party. And subrogation means that we're going after the entity, business, person, whomever caused the damage. So that's kind of the claims process there. If you are not filing a claim because it doesn't make sense, maybe your deductible is high. I know I've got some properties that have high frequency of loss where their deductible is $50,000 and even $100,000 for water damage. We're still going to go through the path of subrogation and hold the responsible party responsible for causing the damage to our property, but we're going to use the assistance of our attorney to do that. It is so important that you recoup those funds that you are owed from negligence. But how we advise now is to have the association deal with multi-unit losses, large losses, to maintain financial control of the situation. The last thing you want is on the 21st floor of your building, you say, it was a contractor that did it from an individual unit owner that hired them. Everybody's got to file their own claims. because what you didn't do is you didn't dry out your common element, which is that drywall, and you gave up financial control of the situation. So now you're going to have subrogation claims that come in from all the individual unit owners that are affected, and that also can affect your loss run report. So what we suggest is always maintain financial control of what you are responsible for. And this is condo. Co-op is a little bit different. We would have to read your lessor or lessee page to determine who's responsible for what. But in condo, we want you to maintain control of the situation with any emergency. We'll figure out who's responsible for the financial portion later, but we need to act now because that reduces the cost of the claim. Your claim status also affects your loss run report, whether it's opened or closed. If you have an open claim and Daniel's going out to the marketplace to get your annual renewal done, if you have that open claim, it's going to affect your premium. So we want to make sure that we close claims as quickly as possible, that you're working with your agent to make good choices. We're never filing claims without calling Daniel, without calling your broker and saying, this is what's going on. This is what we call it a ROM in restoration, but this is what we estimate the total project is going to cost. And then we get on a call and we say, this is what's going on. Daniel, advise us. Are we filing a claim here? Are we not filing a claim? It has to make sense for the association. And I work with associations that are flush with cash, and I work with associations that are most definitely not. And we just need to have the conversation. What's best for the organization as a whole? Anything you want to touch on there?
Yeah, and Erin, to your point, there's a big difference between what's called a shock loss, where it's a one-time event that may have taken place because of something that had nothing to do with anything you could have prevented, and losses that are occurring year every year for the same reasons. If carriers see, for example, you've had multiple water claims, they're going to wonder what's in your walls. How old are your pipes? What exactly is going on in the association that's causing these losses? And do they want to insure that? Versus you had, a roof ripped off by a hurricane. I mean, that happens, right? That's a big difference, one versus the other, and how they evaluate underwriting. I'm going
to interrupt you for a sec. One thing I would have everybody look into in their policy. In the hard market, we saw a lot of language that if you have cast iron pipes that fail in your building, that is a not covered loss. Be careful with who you're letting into your properties to write your policies. I've seen that language in there, which means you have no coverage, just none. I've also seen exclusions for certain types of water damage, and I've seen caps. Generally speaking, I see a cap for a sewage loss in the policy that's $10,000. You can get more coverage for that type of loss. And if you have more than 2 units affected, it's probably going to be more than $10,000 to recover those units or your common areas. So it's a conversation, right? Every property is a little bit different. My large scale multi-condominiums out west of 95, we talk a very different language when we're talking about best practices for you versus a high rise on a barrier island east of 95. So it's about working with your insurance broker, talking to Daniel and say, hey, we can't afford flood coverage, but we're not in a flood zone. We're west of 95. I mean, all of Florida floods. I'm just saying that from a restoration perspective, but it's what's best for your community. We're going to give you best practices, and you take what we say and implement what's best for your specific needs. Last thing here, we want to talk about trends and mitigation. We kind of briefly touched on this. If you're having frequent losses, especially water damage, maybe fire damage, we got to look at the why. Why are we having frequent losses? I have a metro building in downtown West Palm Beach that every about 30 days when I first started with them, we were having a sprinkler head loss. And that was anywhere between $25,000 and $75,000, depending on the damage. So as an association and a partner, we said, why are we having this? And what can we do? What policies can we put in place to prevent this loss from happening? Now, that specific community has a high rental rate, and they have people moving in and out. They have painting contractors, HVAC contractors. So anytime there's work being done in a unit or a move in or move out, they drain the water stack and have a non-refundable $125 fee that the individual unit owner has to pay to the association. They take all the water out of the stack and then they re-energize it after. I haven't had a sprinkler issue since at the community. Kind of shot myself in the foot with that, but it was good for them. We talked about spotting patterns. We talked about loss run data to prevent future claims already. Developing an action plan based on loss history is one of the best things you can do. And it's not just property damage. It's also your lawsuits, your trip and falls, your sidewalk issues. There's a lot of little things that you can have to file claims for, but we need to look at that and the why behind it. And engaging service providers to address high-risk areas. General rule of thumb, if it requires a license, you should not be performing that in-house. And here's why. You decide that you want to do, actually, this is a true story. I had another metro building in downtown West Palm Beach that decided that they were going to put a cup link on one of their main plumbing pipes. And after, I think it was 3.5 hours after their head of maintenance did it, it failed. The plumber was standing right next to him, and the actual maintenance guy put in the piece that failed. Now, if that had been the plumber that installed the piece that failed, the plumber would have footed that bill. But instead, the association had to come out of pocket $42,000 for the damage that this plumbing repair caused. So again, HVAC contractor, electrical work. We're not talking minor electrical work, but we want a licensed and insured provider to be performing those services. That way, the liability comes off of us as an association and falls onto that contractor. I couldn't say that more importantly. Any other questions we have in the chat or the Q&A, Daniel?
Yep. Before I jump in, I just want to mention, I just put a link in the chat for anyone who's concerned about your current policies or doesn't feel like you have the right coverage, or you feel like you're overpaying in premium, or for example, you didn't get a reduction on your property policy this year. I do a free policy review. There's no obligation. You don't have to sign any letters or anything. I'll just take a look at your policies and let you know my personal feelings. You can find the link in the chat. I just mentioned that because I think people don't know what to do or what's going on. And in this market, one thing I want to say, you asked me a question in the beginning, Erin, about this current market. Here's a good rule of thumb. If you did not get any type of reduction on your property policy this year, we need to review that. Every single client I work with got a reduction on their property policy this year. Every single one of them. So if you didn't see that, we should be discussing it. Now, to the questions.
I like the first one.
Yeah, so I have heard that if you have a loss, you could have filed, and that you could have filed a claim, but you chose not to. You're required by law to still put your insurance company on notice of such loss. Can you confirm this and the reason for this?
So when it comes to legal, I always defer to attorneys. I do not personally know of a law that requires you to put them on notice, but being put on notice is very different from filing a claim. It protects you. I think it's a best practice, especially for slip and falls, deaths on your property, any sort of lawsuit, property damage wise. If it's big enough, absolutely put them on notice. Like I said before, it doesn't ding your loss run report to be put on notice, but what it does, it keeps you in compliance with your policy so that if you have subrogation claims, if you 2 months, 3 months down the road need to file a claim, you're still in compliance. So I think more of a best practice than legal. But again, if you're looking for a legal answer, I would consult with your attorney. I'm just not aware of a Florida state statute that says you have to do that.
I would agree with everything you just said. I don't know of any legal requirement. It is definitely best practice.
Absolutely.
Why does a broker want to know the association's budget when preparing an insurance proposal? You want me to take that one?
Yeah.
Okay. It's really the D&O carriers that are asking for that right now. And they want to see what premium you've assigned for your line item for your insurance. They're not going to know exactly how much you're paying for each policy, but they want to know that you have allotted the money available in your budget to pay the premium. And that's really what it's about. And everyone is asking for it. So don't be surprised if that's a question you get.
I think this next one's for you too. Is having a difference and conditions policy helpful for an association? Question mark.
Hey, Dominic, a difference in condition policy is what we use to change the level of coverage. It is not a requirement. And typically we use that with Citizens because Citizens policies only gave you basic perils coverage. and we wanted to increase the level of protection so that you are in line with the statute. So it's actually, unless you're with Citizens, you really shouldn't be seeing a difference in condition policy, but they do come up here and there.
Awesome. I think
Who is responsible for choosing the adjuster, the insured or the agent?
great question. So it can be either. I recommend that you choose. A lot of experienced brokerages are going to have preferred adjusters that they like to work with. So I would start, if you don't know anybody, ask your broker, who are you currently working with? Do we have somebody assigned to our policy? If you need a couple of recommendations of people that I've worked with on claims, you can call me directly at any time. And there's a lot of different types of adjusters out there. There's adjusters that work with small associations, big associations, adjusters that like hotel, some like industrial. So you really want to make sure you're vetting and working with somebody that's specific to your property type. Because I've got commercial adjusters that won't touch condo with a 10-foot pole. And I've got people that really, really like doing condo claims. So it's a vetting process, but we'll walk you through it.
Okay, this next question is kind of a doozy, and I get asked it a lot. So I can go into this for those who want to stay on and listen. But basically, the question is, our HOA has been told that only the agent of record can shop for new insurance. We have only had increases the last 5 years. We had a lawsuit that we were aware of in a premium. Our premiums were constantly going up before the lawsuit and now compounded by the loss of the lawsuit. The insurance attorney representing our HOA did a very poor job in our defense. The judicial ruling went against the association, and our association has been with the scam broker for over 10 years. Okay, let's touch on broker of record, because this is a big one. There has been a fallacy that's been spread throughout our industry for many, many years that says that you must sign a broker of record letter in order for an agent to shop the market for you. That couldn't be further from the truth. There's only 2 reasons that you need a broker of record letter. The first one, very simply, is I don't like my insurance agent. I want to work with someone else. Take it away from this agent and give it to this agent. And when you sign a broker of record letter, that's exactly what you're doing. So everyone on this webinar, do not fall for this scam. If an agent says to you, I need a broker of record letter in order to shop for you, honestly, I would never talk to that agent ever again because they're not telling you the truth. So why would be the other reason for a broker of record letter? I want to give you a simple analogy that I think people can understand. When you think of insurance and they talk about markets, the word markets refers to different carriers. So we've all been in a bank before, right? When you go into a bank, you know how they have teller windows and there might be 10 of them? Think of the insurance marketplace like a bank with teller windows. Only one agent can go up to one teller window and request a quote. So when your agent goes and shops the market for you, they go to a teller window, request a quote, and are given a quote in return. That teller window now closes. In 99% of cases, that insurance carrier will not give another quote to another agent. So what happens when one agent shops, when you want a different agent to shop than your current agent? All that an outside agent can do is go to those windows, those teller windows that have been left open. So effectively, if you want to understand if your agent is doing a good job for you or not, it's very simple. If you pick one other agent, and I can't stress this to you enough, do not offer 2 agents, 3 agents, 4 agents to go shop for you. You are going to make a mess of the marketplace, and all of the carriers are going to retract and say, there's a problem with this account. We don't want to even quote it. Okay? So here's best practice. Pick one agent that you want to give a chance to compete for your business. Let them go to the markets to find open markets for you. Do not give them an agent of record letter. Just say to them, you're welcome to go to the markets and find a competitive quote. If they come back to you with a competitive quote or a lower premium than what your agent brought you, What that means is that your agent didn't go to those markets. They didn't go to those teller windows to request a quote, in which case the new agent has earned your business because they've done what they were supposed to do. A good agent, and yes, I consider myself a good agent, not to pat myself on the back, we go out to market at least 4 months before your renewal and tell all the markets, hey, we're the agent of record here. We are going to be coming to you for a new quote this year. And we line those up and block the market from other agents. Unfortunately, in this business, many agents are rewarded more for new business than they are for renewal business. So what ends up happening inevitably is that an administrator on their staff goes and gets your renewal. They're not actually going and shopping for you. They're just getting your renewal quotes. And unfortunately, the administrator doesn't usually make a whole lot of money and honestly doesn't care whether or not you get lower premiums or not. So essentially what's happening is it's being handed off. You want, and I see plenty of great agents out there who, when I go to compete against them, there's no markets available for me because they've already blocked the markets, they're already been taken, and that agent's doing their job properly. But on the flip side, I win new accounts every week. And the reason is very simple. We will do what's necessary to look at all markets for you. And that's how insurance works. That is the simplest way I can explain to you the marketplace. So the only other reason, to round this off, not to get on my soapbox, because I could do this for a while, as you could probably tell, the only second reason to give an agent of record letter, the first one, as I mentioned, was I don't want this agent, I want that agent. The second reason is an agent, without your permission, blocked markets, went to those teller windows and got quotes when they shouldn't have done that. You can give a broker of record letter to the agent of your choice to reopen those markets and get the quote that they would have been able to get if they hadn't been blocked.
I think, just to go back one more time, if you think that there's something wrong with your policy, send it to Daniel. He'll review it. He'll come back and say, you're in a great place, stay where you're at if it's a good policy. But he'll also say, there are some other things I see that you could get better coverages on. So that's really the due diligence, I think, that is important to understand. And your broker's your advocate. They should be bending over backwards for you, coming to your property, sitting with you at least once a year, making sure they understand your CapEx projects, making sure they walk the policy through with you so you understand, because they make a lot of money from your policies too. So if your broker is absent or not in the state of Florida, that drives me absolutely nuts. Using out-of-state brokerages, they don't have access to the lines that our in-state brokerages have. It's so important that you're working with condo-specific insurance brokers. It is really, really important that those are the policies that when I get after a loss happens and I'm like, your policy sucks, you're a cash pay, you don't have coverage for this, and then they get upset. So make sure you're properly insured is one of the most important parts about being on a board, being a property manager, understanding your coverages. And Daniel's a great resource to make sure you do understand what you're covered for and what you're not covered for. Super
Thanks,
important.
Erin. I appreciate you saying that. I also, I think you would speak to this better than anyone. You must know what your exclusions are. People will take policies because the premium is less money, not realizing that you're excluding things that you need to have. I mean, I cannot tell you how many times this year I've seen general liability policies that exclude water damage. How could you have a policy that excludes water damage? I mean, a property policy that excludes water damage. That's like a no-brainer. I mean, you have to have that in your policy coverage. You must understand what you're paying for. Don't just take a policy because the premium is less money. Look at what you're actually being offered. What is the coverage you're getting? What is being excluded? And make sure you understand what that is, because if something happens and you call Erin and say, hey, Erin, I need you to come out, and then she looks at the policy and sees whatever it was is excluded, well, you're paying for that out of pocket, and there's nothing Erin can do about it.
You're only as good as your property policy allows you to be. And that goes even for flood insurance. If you don't know what flood insurance covers, you need to call Daniel and make sure that you either have it or don't have it, one or two, right? And then if you do have it, Specifically for in condo, you understand the role the association plays, because it's not a day-to-day water loss. And when you enact flood insurance, it's a completely different ballgame. And the flood program is run by the NFIP, which is a government agency. So Florida statute is not our normal day-to-day. Florida statute laws for water damage don't apply, especially when we get into hurricane season and have flood claims that we have to file. So talk to Daniel about the coverage for that. It's 14 items and that's it. It's very, very specific and it changes. So make sure you're up to date on that as well.
Yeah, absolutely. We'll be doing a webinar hopefully soon. I just got approved by the DBPR for an insurance webinar. So I'm going to be covering a lot of the basics that have to do with insurance so we can get everyone more educated on these policies and understand what you're getting and what's being covered and what's not and what you should be looking out for. But listen, we could probably talk about this all day. I'm sure Erin's got way more things to do. Did we get through everyone's questions?
We got through everyone's questions. There's one specific one that I think you should take offline. But
okay,
absolutely.
I'll take a look at that. But please, everyone, feel free to reach out to us. After these webinars, Peggy sends out a list of the sponsors to everyone. There's always the email with the replay of the webinar. And Erin, are you providing your slides?
Absolutely.
Yeah, so Erin will provide her slides. But feel free to reach out to us. We sponsor this because we want to help you. We also want to talk to you. We want you to feel like we're your advocates and we're here for you, or we wouldn't do this. So please feel free to reach out to us. Let us know what we can help. I think I speak for Erin and all the other sponsors. Just because we are not your dedicated contractor or representative, that doesn't mean we're not willing to talk to you and have a conversation and offer you guidance if you don't feel like you're getting it from your own sources. So please feel free to reach out to us. And Erin, thank you so much. You're always amazing to listen to. You always have huge amounts of insight. It's always my pleasure to be the moderator for you. And Peggy, thank you for organizing this. I'll turn it back over to you.
Okay, great. Well, you're getting lots of positive comments, both of you, and everybody's saying thank you, thank you, thank you. So it's just awesome to get you back again, Erin. She comes on every, I don't know, 3 or 4 months. I try to book her as often as I can. So we will have you back again in the fall, hopefully with Daniel as a compliment as a moderator. So thank you guys. I will mention a few of the upcoming webinars. I'm trying to find new material and information all the time. Coming up on this Friday, actually, I have another Construction Summit series coming on. It's on building diagnosis and repairs. So this kind of ties into what today was about. So you can look for some information regarding your building envelope. On July 22nd, I'm going to Tampa physically, which I haven't been in a long time, doing a lunch and learn specifically for the cams over there. We're going to Ruth Chris Steakhouse and look for a flyer on that. On July 23rd, back to Broward County, there is a L&L trade show, the HOA Condo Convention trade show every year. And that's going to be, again, with several sponsors you might want to tap into for proposals. On July 30th, I have a longtime contact and friend of mine, Jim McGuire, is going to present from Liberty Air, air conditioning, electrical, and product he handles called Filter Buy, which are the filters for the HVAC systems. Rounding the corner into August, we've got Vinteum coming on. They're going to be presenting August the 4th. Everything you wanted to know and anything you didn't want to know, but how easy it is to use a website on August the 4th from 12 to 1. August the 5th, I'm excited. I've got a new sponsor coming in, K7 Reserve Company. K7 is on both sides of the state, and they have some information regarding reserves if you want to buff up on that. And new classes coming from Ball Janik. It's an attorney firm that specializes in construction defects. So they're going to be coming up in August. Daniel mentioned he's got his course coming up. I'm going to book him as soon as possible on insurance basics. So other classes I'm looking for, I've been asked about are legal updates. I'm looking for the EH1, the EH2 classes, and I hope to have those to you before September 15th. So enjoy your summer, everyone. Thanks again, Erin and Daniel and all the sponsors. And thank you to everybody on today for choosing our webinar. Stay safe, and until the next time, we'll see you then.